This is Scott Becker with the Becker Business and the Becker Private Equity Podcast. Today's discussion is inflation, the national debt, and housing prices. So, one of the things that we're watching over the last few years is there is a shortage of housing inventory, at least affordable housing inventory. And I'm going to tie together that with inflation and the national debt. So here's the issue. In terms of housing cost, the cost to borrow has risen to about 6% with mortgage rates. But if those rates go down, when rates go down, that's not actually helping prices. It means, quite frankly, that prices are going to go up because it's more affordable to borrow money to buy the house. So if you take $1 million house that right now at 6% interest costs $60,000 a year interest, if you take those interest rates down to 3%, you're likely not to see the actual cost of interest go down to $30,000 a year. Rather, you're going to see some spike in the housing price because there's just not enough inventory to support the amount of buyers. When you talk to realtors today, what you hear constantly is there's not enough inventory, we're short inventory. So every house of any decency ends up in a multiple bid situation, which means it's really expensive for a young family or an older family or an individual to buy a house. And interest rates are just part of it. But even if you bring down interest rates, if there's a shortage of inventory and it's expensive to build and it remains expensive to build housing, then what you see is actual housing costs aren't likely to go down because you're likely to see the actual price go up, the valuation of assets go up, if in fact interest rates go down. And so why are we stuck in this vicious cycle, this vicious circle? At the end of the day, we're likely stuck in this vicious cycle, this vicious circle, because the United States has so much debt that it's spilled into the economy. We're up to about $39 trillion in debt. And until you start to take that debt down, you're going to continue to have the government pouring money into the economy. And what that ultimately means is the pouring money into the economy means that you artificially have housing prices, every kind of price, valuations, asset prices artificially inflated because the sort of country is flowing in cash that's coming out of deficit spending. Now, you can get through this the hard way or the easy way, and people talk about all kinds of additional government programs to try and fix this, but it can't be fixed without taking debt down. The national debt's the problem. That's what causes inflation and what leads to increased pricing in almost everything else. So at the end of the day, you can do all these government programs to try and encourage more housing, but if at the end of the day, there's still so much inflation out there and the cost of building is so high and everything else is so high, everything else becomes Band-Aids that don't really solve the problem. We say often that debt kills countries, it kills companies, it kills families. This is the case. Now it's killing affordability. So many of these things are sort of well-intentioned, but the secondary consequences are horrible. Well-intentioned. We give people subsidies to buy health insurance. It seems like a good idea because people can't afford health insurance. But what it does is those subsidies raise the cost of healthcare and health insurance, sort of in the same vicious circle that we're seeing with housing that we see with healthcare. The same thing's happening with education. We give people lots of loans to buy into education, to buy their education. Then tuition rises to ridiculous amounts. Then we're in this vicious cycle where people can't afford it without more loans. And we end up again in this vicious cycle. All these loans, all these government subsidies lead to inflation. They're often well-intended, but they're awful long-term policy. In any event, that's our thought today on housing, inflation, and the national debt. Thank you for listening to the Becker Business, the Becker Private Equity Podcast. It's got to stop. I'm not sure how, but thank you for listening to the Becker Business and the Becker Private Equity Podcast. Thank you.